All right, cool. Okay, so let's just start. Um, I think we will use 15-minute time frame. So cool. We'll be talking about supply and demand today. Let me use this little time to reiterate the things that we've been talking about for these past days. All right. We spoke about market structure yesterday. We talked about market structure, higher highs, higher lows, and then the trending market and all of those stuff we talked about yesterday. And now, like this, the things with mind you, many of you guys didn't submit the assignment I asked you to submit. Now, one of the things about doing free stuff like this is that many of the guys will not be committed to it. Trust me, if some of you guys paid, or all the guys in the group paid for it, you will not be late to class. You will value the knowledge, and you will do assignments. Imagine going to the university or going to school, and then your lecturer or your teacher gives an assignment and you refuse to submit. The implication of that, yeah. So um so you know the implication of that. So I didn't see my assignment. Nobody, I think only one person submitted, and that was it. Now I'm going to say this: I'm not going to force people to learn this stuff. I know that the numbers for me doesn't matter. We have well over 100 people in the channel, in the group. But you see the amount of people turning up for the class tells you that there's a whole lot, It takes just getting people to join the group free class to get this done. It takes a lot of commitment and stuff. So we are getting these things for free. Please and please value it. For the ones who are here and who truly want to make the most of this, I beg you in the name of God, value this stuff. Yeah, please value it. Okay, let's delve into the topic of discussion. All right, yesterday we spoke about market structure, and we talked about two types of market structure, or the types of market structure we have. We have the downtrend, or rather the trending market, and then the ranging market. Yeah. So what do we say a trending market is? A trending market is that market that moves in a particular direction. Yeah. For instance, we have downtrend, and then we have uptrend. Yeah. So this is the nature of a trending market. So, and what do we say we want to be doing if the market is trending towards the downside? If the market is trending towards the downside, we all agree that we want to be getting in on sales opportunity, because when the market is selling, the market is going down. Yeah. The market is selling, it means the market is going down. We are bearish. So, and if the market is buying as well, it means that we are going up. If you want to get in on a buy trade, you are expecting the market to go up. If you want to get in on a sell trade, you are expecting the market to go down. So this is one of the types of market structure we have, the trending market. Then we have the ranging market. What is the ranging market? A ranging market is that market condition where the market is trapped within a range in price. It's neither going up nor coming down. Yeah, it's trapped within a range in price. So it makes it difficult to get in on a buy and hold, or getting on a sell and hold. So it's trapped within a range. It's neither going up nor coming down. It's just there. So these are the two things we talked about yesterday. Then we talked about time frames. I guess we talked about time frame. So I told you guys that whichever time frame you are trading, you have to look out for the time frame. So if you have like as it is right now, I'm on the 15-minute time frame. And so what that means is that every candle you see here, and all the candles you see here took 15 minutes to form. Now, if you are paying attention to my chart very well, you see at the right hand side where my cursor is, you see it, yeah. So I'm on the 15-minute time frame. So you see the time counting down. So at the end of in less than 1 minute 36 seconds, the 15-minute candle will close. Then another will begin to print, another will open and begin to print. Yeah. So if I go to, let's say, 30 minutes, you see the time changes. You see that? So in less than 16 minutes 20 seconds, another 30-minute candle will close. Same price action, same market condition. If I go to 1 hour, the same candle, you see that in less than 46 minutes 8 seconds, 1 hour candle will be done printing. If you go higher the time frame as well, you see that, you see how it looks on the 4 hour. So we have 45 minutes 51 or 50 seconds for the 4 hour candle to be done printing. Yeah, the 4 hour candle to be done printing. Sorry for that, guys. So if you go higher the time frame, the higher the time frame, you find the time, the countdown, of that particular candle. So I choose to stay on the 15-minute time frame. Sorry. All right. So I'm on the 15-minute time frame right now. So you see that in less than 12 seconds, this 15-minute candle will be done printing. So you guys will see what I'm talking about. Why am I drawing? All right, so cool. You see that another candle, another candle has started printing, yeah? So that's how you use your time frames. So cool. We spoke about downtrend, ranging market, uptrend, and stuff. And I told you guys what do you want to see when the market is going down? For a downtrend, for instance, as the market is trending towards the downside, it's printing lower high, is a lower high, lower low, lower high, lower low, lower high, lower low. So okay, let me draw it with a very good tool. So we have this, yeah. We have, for instance, let me do a buy scenario first, then we'll talk about the sell scenario too. So for a buy or for a bullish market, the market is trending towards the upside. So cool. What would the market be printing? The market will be printing series of highs and series of lows. So you have this here. It is called the higher high. Sorry, let me use higher high. Then we have higher low here, higher low. So okay, higher high, higher low. So let me copy higher high, higher low, higher low. So cool. Are you guys seeing it now? So for a trending market that is for a market that is trending towards the upside, this is what you will be seeing. Yeah, the market will print in a series of highs and lows. So this is a higher high. So the market will print a low. And if you remember yesterday, I told you in that diagram, it is called the impulsive, the push phase, then the corrective phase, the push phase, the corrective phase, the push phase, corrective phase, then the push phase. The market doesn't just go in a straight line. Please, the market moves in waveform, yeah. So it doesn't just go in a straight line. You don't expect the market to just move in a straight line and just keep going up. It doesn't work that way. So it moves in a waveform. And then if the market is going up or the market is buying bullish like we have here, most of the massive moves comes in line with the trend. So if you have like a push phase here, you find out that too many times the corrective phase used to be very messy. You understand that? So you want to get in on a buy around these areas so that you can have that push phase, that aggressive move, because the market is bullish. The aggressive moves tends to come in the direction of the trend. So we have this push phase, we have the corrective phase, then we'll have another push phase, we'll have corrective phase, we'll have a push phase. So that's the reason why if the market is trending towards the upside, you want to be getting in, on a buy position. If the market is trending towards the upside, so if you have an uptrend like we have here, you want to do yourself a favor or the honors of getting in on a buy position so that you align yourself with the move towards the upside. You don't want to be caught trying to sell this market, because even if you have a move that the market may most likely sell, but it will come later and take you out. And then one of the things we talked about yesterday as regarding trending markets, as we like in this example that is here, I told you guys that if the market is trending towards the upside, the lows are being protected. Like these lows, they are being protected. The lows are being protected. The lows are being protected. So you don't want to have the market always tend to respect the low. So in case you have something like this, market taking out this particular low, then it indicates something. It tells you that the market may most likely want to start selling. So in some scenario, you have something like this. The market begins to change, yeah? So the market changes from an uptrend now in a downtrend. So, and in a downtrend, what did I tell you guys? You guys want to start getting in on a sell because the highs now are being protected, yeah? Because in this case, the market is supposed to respect this low. I told you it's supposed to respect the low and create a new high for us like this. Yeah. But what happened? What happened was that the low was violated. And as the low was violated, it means that the market is trying to protect this high. So if the market pushes back again, I'm going to be entering so that I'll create a new low with the market. Are you getting it now? It's that simple. Creating new lows in a bearish market or in a market that is selling. Yeah. So you want to be getting on a buy opportunity on a bullish market, a bullish trend like we have here. And you want to be getting in on a sell opportunity on a bearish market like we have in this case. Please, do we understand to this point? Excuse me. If you don't understand, please ask questions so that we can trash. All right. Sorry. A lot of guys want to join this call. Sorry. What's happening? Oh. All right. So if you have any question, please ask now so that I know we are on the same page. If you have any question, please ask now So before I continue further, like I want to take you guys deep into this stuff. So if you have any question, please ask now so that we can trash this. I know I I want you guys to understand this, understand it to this point before I move further. I don't want to, talk and talk and a whole lot of us are not getting it. So please, if you have what's it called, any question, ask. Or should I ask you guys a question? I want two people here to explain to me in just 1 minute what I've just said about an uptrend and a downtrend. Please unmute yourself, or you can indicate by raising up your hand and then you talk. Then I know you understand. Or I can choose somebody, I can randomly call anybody to do that. So I want to know you guys are following to this point. Please, if you want to talk, indicate, or better still, I'll choose somebody to. All right, so you can unmute yourself and talk. So what do you understand by an uptrend and the downtrend so far? Okay. You that said I should choose somebody, please unmute yourself and talk. I have decided to choose you right now. You can talk. Please.
Hello, good evening.
Good evening.
Yeah.
So what do you understand by uptrend and downtrend? I don't know if Google Meet have annotation pen. Don't know. Let me check. Please continue. I'm hearing you. I just want to check something.
What I
So
understand by uptrend is or downtrend is
yeah.
when market moving towards uptrend or downtrend. Then one market is moving uptrend, then you have to be seeing some things like creating new higher highs and
Okay.
the lower highs. Then when it is moving downtrend, it will be creating lower low and lower highs. So,
Yeah. Makes sense. Makes sense. So and then I said, to add to that, I said to you guys that when the market is creating these highs and lows for an uptrend, the market is respecting the lows. The market is supposed to respect the lows, and then okay, I think let's use this whiteboard if there's any such thing. Starting a white. Okay. Let me let me use the whiteboard and see if uh okay. Um, there's no need for it. So cool. Like I said now, for an uptrend, what can we find in an uptrend? Higher highs, higher lows, higher highs, higher lows. So for a downtrend, we have, let me write it out. We have this lower highs here, lower highs, lower highs, and then we have lower low. What happened to the what happened? All right, lower highs and lower low, lower highs, lower highs, lower highs, and lower low. So lower highs and lower. Let me clear this stuff. Clear this stuff so that it becomes neat. Hope you guys can see it. Lower highs and lower low. I want to make the drawing clean so that you guys can see it. All right. Okay. Um, it's better now. I think it's better. Hope you guys can see. So that's the nature of the trending market. Now let's talk about the ranging market, and I'll show you guys. You have enough time today. I'll show you guys all of these things on the chart. I just don't want to draw because you will not find it this neat when you open your charts. You will not find it this neat when you open your charts. Yeah, it's not like it's not textbook like this. So I'm going to make sure that we find that on the chart, and then every one of us can align, understand better. Sorry. All right, cool. I think it's better now. So for a downtrend, please make sure you guys do assignments. If I give you guys assignment, it helps you so that you go do your own study. It helps you. You do your own study and understand better. So cool. This is the character of, or the nature of, a trending market. So for a downtrend, we have lower highs and lower lows. Yeah. So lower highs and lower lows. What's happening here? You have lower highs and lower lows. Are you seeing that now? So cool. Let me screenshot this. Let me print this stuff and send it to the group. Okay, print. Okay. Let me send it to the group first. Oh, okay. All right, so let's continue the lesson. Yeah, cool. For a ranging market, I told you guys, it doesn't have a particular direction. So I can clean this. Let me clean this stuff. Clean this stuff. All right, so cool. Okay, so for a ranging market, it doesn't have a particular direction. It moves within a range in price. So you can have something like this. You can have something like this. See that the market can just be doing something like this. So it doesn't have a direction. So you cannot say in this case that the market is buying or is bullish. You cannot say the market is bearish. Are you seeing that now? So it's just stuck within a range in price. It's stuck within a range in price. It's stuck within a range. Excuse me, let me just get something done. Excuse me, just give me 1 minute. Can you guys hear me? Please, if you can you guys hear me, please? If you can hear me, say you can hear me. I want to know. Can you guys hear me? I want, please unmute and
Yes,
speak. All right, all right.
we can.
I to know. My network went bad. Okay, cool. So like I said, for the ranging market, the market is trapped within a range. So we cannot say the market is going up. We cannot say the market is coming down. So it's trapped within a range. So for instance, you can have this range. So the best way to engage markets like this, the best way to engage market like this is to someone wants to join the call. Okay. I need to. So cool. The best way to approach market like this is to find the range. So you find the highest point of that range. So in this case, this is the highest point. So, and this is the lowest point. Yeah. So you find the highest point and the lowest point of the range. I think someone wants to join the call again. All right. Okay. I want to ask question. Please ask if you're raising your hand to ask questions, please.
Sorry, I can't see your screen.
You can't see my screen.
Yes, I
Okay.
can't find it.
Can you guys see my screen now?
No, we can't. Okay, yeah.
You guys were not seeing my screen before, so wow. All
We are
right.
can
You said?
It's back now.
Okay, okay, okay. So cool. When we have a ranging market like this, so it means market is trapped within a range. So it's neither going up nor coming down, it's just trapped. So what you want to do in this kind of market condition is that you find the highest point, yeah, and the lowest point, just like we have here. So you have your line and draw your line, whatever tool you want to use. So let me use this tool. So we have our line here and we have another line here. So what you want to do is when the market gets to the highest point, or this highest point level, let me use that word. The level is not just a line, it's a level. So you can have like this level here. Are you getting it now? The zone. So we have
what
this zone here. So what you want to be doing is buying the lows and selling
okay?
the highs within ranging markets like this. So what you want to do is sell the highs, yeah, get in on the high, sell the highs, and buy the lows. You understand that? Buy the lows. You see that now? You sell the high and you buy the lows. Are you getting it now? Sell the high and buy the lows. So you don't want to be trapped in this middle. Now, one of the things that you don't want to be doing is buying and selling inside of the middle, the range. Because for instance, let's assume you are selling from here. Hmm? Or let's assume you want to sell from here. You are selling from here, for instance. You see how the market was selling and then it came and it took you out. Yeah. And let's assume you want to buy from here too. You are buying from here. You bought and then you are hoping that the market will keep buying, like buying. You're expecting the market to keep buying, buying, buying. You see how that it came, it took you out here. So you'll be confused. What is the market doing? Okay, the market sold. Then you say, okay, I want to sell. You try to sell. You think just kept buying. You try to buy, it's selling. So what you want to do is to mark out the highest point and the lowest point. So it is safer to trade from the extreme of the range. So you don't want to be caught trading inside of the middle. Yeah. So the highs and the lows are the best place to look for a trading opportunity. So I guess this is clear enough. Let me screenshot this and send to the group as well, so that okay. All right, send it to the group later. So cool. Let's get to find this on the chart. Yeah, let's get to find this on the chart. So our trending market. I know we're supposed to talk about supply and demand today, and we'll talk about that shortly. So, but meanwhile, let's find. I'll use a more lower time frame just for data purposes, so that we'll be able to find enough data. So now, for instance, you see, for a rangy market, I think I found a perfect example for it. So for a rangy market, we have this. Are you seeing that now? We have this here. You see how that the market is neither going up nor coming down. It's neither going up, it will go up, come down, go up, come down, go up, come down, go up. I think someone wants to join this call. Let me check. Okay. All right, cool. So you see that the market is just trapped within a range. It's neither going up or coming down. So what do you want to do in this kind of situation? Like I told you guys, let me delete this. Okay. So what you want to be doing in this situation is marking the highest point, yeah, and the lowest point of that range. Are you seeing it now? So it is safer to get in on a sell from here. Are you seeing it now? Getting in on a sell from here down, and getting in on a buys from here. Getting on a buys from here up. Are you seeing it now? Are you seeing it? So it's safer than trying to buy from the middle here. Market will still come and take you out. You try to sell from the middle here in areas like this, the market will still come and take you out. Are you seeing that now? So it is safe to avoid this middle. Avoid the middle of the range. When the market is neither trending towards the upside nor trending towards the downside, you want to avoid the range. So the best way to trade the range is to trade the highs and the lows. I hope you guys got that to this point. So the highs and the lows, very, very important. So cool. Let's move on to trending markets. Let's find trending markets. Trending markets. I'm looking for an example that makes sense. That makes sense to beginners. Okay. All right. So what can you say about these markets? Looking at these markets from where it is. So you could tell that this market is trending towards the downside. Am I correct? So now let's get our trend right. So we have this high for a downtrend. We have the higher high. Sorry, the lower high. We have the lower low. Yeah. We have the lower high here. We have another lower low here. Sorry, lower low here. We have a lower high. I will explain why this other high was taken, but that will be in another discussion. So lower low, lower high, lower low. Yeah, we have this. Some people say, why did he take out this high? Don't worry, you get to understand later. So cool. This is not like the perfect picture of a downtrend, like the way it is being drawn, the way I showed you guys, So it's not like a perfect picture of a downtrend, but we can actually use it just to explain what we mean. Yeah, so cool. But we have this trending to, like, we can tell that the market is going down, like it's moving towards the downside. So cool. We find out that highs, most of the highs are being protected, kind of. Yeah, protected, kind of. And I will tell you how and what I mean by that. And it's because I'm on a lower time frame, like the 5 minute time frame. That's why you have all of this thing happening like this. But the idea for a downtrend is, if you see the market creating lows, yeah, you want to join the market to create lows. Are you getting it now? Creating lows. And now, if you look at this market very well, you can tell that most of the impulsive moves, like most of the big moves, are towards the downside. Are you seeing that now? Most of the big moves are towards the downside. Are you seeing that? Most of the big moves are towards the downside. Most of the big moves are towards the downside. Are you seeing it now? So you want to be doing yourself the favor of getting in on sales from the top. Are you seeing that? Getting in on sell position from the top. Getting in on sell positions from the top. Are you seeing that now? Getting on the sell positions from the top. So that's where you get, that's where you catch the big moves. Are you seeing that? Are you seeing that now? That's where you catch the big moves. Bearing in mind that the market will protect the highs for you, because you want the market to create a new low. So, and if you check, if you look at this market very, very well, you can tell that um the lows were taking much more. Are you seeing that now? The lows were gone. The lows gone. Low gone. Are you seeing that? Low gone. Are you seeing that now? So it was the lows that, price takes a lot in this market. So you want to be joining the price, you want to join the price to take lows. Join the price to take the previous low, create a new low, takes the previous low, create a new low, takes this previous low, create a new low. Are you seeing that now? So the highs, kind of, if you look at these highest points, they were kind of protected. Are you seeing that? Kind of protected. Are you seeing that? Kind of protected. So you want to get in on a sell when the market is selling, is trending towards the downside. Getting on a sell, getting on a sell, getting on a sell. And now I will talk now. I know many of you will be wondering, like, what was all this candle? Like, all of this candle. Let, let me tell you, all these things you are seeing here, they are millions and billions of dollars. I can tell you for free. Are you seeing it now? Millions and billions of dollars. All of these things you are seeing here. So if you can get in on good opportunity and you have money to risk, to stake, trust me, you'll be making money here. Are you getting it now? So that is it for a downtrend. And let's talk about uptrend. Let me look for a very good um uptrend scenario. Okay. All right, let me use this just for this teaching, for the sake of this teaching. So as you can see, what do we have here? Yeah, are you seeing it now? The market is going up. And now many of you will say, how do I know when the market starts to go up? Let me assume that the market was, now forget about these shaded parts. Let's assume the market was here. So you're wondering, how do I now know that this market from here will start to go up and print all of this candle like this? How do I know? It's very simple. For the starters, what you want to do is draw a line. Now, when you draw a line like this, how to identify the trend? Very helpful if you like. So you want to see at least one touch, two touch, then one touch, two touch like this on the line. Then you believe at the third touch, the market will still respect the line. You understand that now? So when you draw your line and you find one touch, and then you find two touch, then you find the second touch, then the third touch, at least two. You should find two touches within on your line for you to confirm a trend. And if on that's like the basic level, basic level. Two touch. Some people use three. They tell you at least three. Then the fourth one you can get in. So if you are drawing a line for a trend, make sure you have at least two touch on the line. So let's even use this guy. Let's use this one. Are you seeing it now? So let's assume I waited, price did this for this first touch here. I waited for the second one. Yeah. On the third one, I get in. The fourth one, you see that now? Until the line is broken. Until your line is broken. You see at this point, it broke. Are you seeing that now? It broke at this point. So until the line is broken, that invalidates this line. But people use this, I mean, as simple as this thing is, people use it to make money up to today. Are you getting? I mean, serious money just from this little, just like people. This is what people, so many guys use as a strategy. So I don't use it. I don't use it, but like this is like the basic for you to confirm a trend. You must have like at least two touches on your line. Then the third one you take, the fourth one you take onto the line until price say no, until the line is broken. The same thing for a downtrend. Let's get a very good one. If you can just have two touches on your line, you are good to go. Find that one touch, two touch. This will have. Let me see. Did I draw this thing where I don't use this ball? Okay, cool. Are you seeing that now? Are you seeing that? So we have this one touch here. We have these two touch here. So you wait patiently at the third touch. Are you seeing it? You get in. Are you seeing that now? You get in at the third touch. Make sure the line is resting on two highs or two lows. Then you can take the third one. Are you seeing that? Are you seeing that now? You can take the third one. So if it doesn't present, don't force it. You mustn't trade every day. So when you come on your chart, just want to find the things that you consider the confluences for a good trade for you. You understand? I have my confluences. You understand that the things I want to see before I enter a trade. So you too must have what you want to see. So, but to confirm a trend, I just showed you how to confirm a trend. Like one touch, two touch. At the third touch, you are good to go. The fourth two, you are good to go. You see that happen here. 1, 2, 3, you are good to go. Look at the fourth, you are still good to go. Are you seeing that now? So just make sure the line the line, is touching two highs or too low, depending on the direction you want to trade. If you want to sell, the highs, price must touch two highs, just like we had in this case here. Two highs, then the third touch you sell. For a buy scenario, price must touch two lows, then the third one you buy. Are you seeing that now? Please, are we clear on this? If we are not clear, ask questions. I beg you, ask questions. Ask questions, please. All right. You can unmute yourself and ask.
Sorry, are we buying from the uptrend or the down, selling from the downtrend? A little bit low.
If you are selling, the market, if you want to sell, the market should be coming down. Yeah, that's what we said. Because now if buyers, they push the market towards the upside, why sellers push it towards the downside? It's simple. So if you're a buyer, it means that you want the market to go up. So for the guys buying, the line should be down. So after one touch, two touch, at the third touch, you take your trade. Are you getting it now? For the guys selling, your line should be up. Are you seeing it? First touch, second touch, at the third touch, you can sell. Are you getting it now? So this like the basic, like a fundamental principle for knowing the trend of the market. Are you getting it now? Like this the basic. And I tell you the truth, many people I know, in fact, to be very honest, I submit to you today that most of the big boys you find around this industry, this is what they use. So this is not like it's just, how will I be? No, I'm telling you, this as simple as this thing sound. This is what many of these guys use to make money. No complications, like nothing complex. Are you getting it now? Nothing complex. So please, if you have your questions, you ask so that I know we are on the same page. All right. Like someone is raising,
Oh, sorry, yeah.
or he's
No,
okay.
this whole analysis you're doing, it's on
Yeah,
trading, yeah.
yeah,
I was wondering, is it possible to do it on MetaTrader 5 as well?
yeah. Of course, very possible. We have the tools there. But
Oh, okay.
one of the reasons why I prefer the trading view is because of the flexibility. Yeah, so it has
Okay.
a lot of tools and it makes it is handy. How will I
Mm.
put it? Like makes it very easy. You can see how clean the chart is. Yeah, but I use the MetaTrader for executions. So I
Oh,
don't use it
okay.
for analysis. So, because this is like one of the best place you can do your analysis. One of the
But,
best place
but
trading view.
if we're to do our analysis in trading view, we have to upgrade it.
No. You don't have
Okay.
to pay for any plan. No. Like this platform right now. I don't have any subscription on it.
Okay.
Yeah. So the one of the advantages you get when you pay or when you subscribe to any of their plans is that you have access to more tools. Yeah. Like I said, if you look at these time frames here,
Mm.
I cannot access the seconds time frame. There are people that trade seconds time frame. I tell you the truth. So
Wow.
if you have their plans, you can trade 1 seconds, 2 seconds, 3
Mm.
seconds,
Oh,
10
okay.
seconds. You see that now. So, but I don't have that. I cannot access it because there's no plan. There's no subscription on it yet. You see that now. So,
Okay.
but this is like one of the best tools you can use for your analysis.
This is
One
the
of the
one you
best.
recommend.
Yes, I recommend every trader use it. Every trader use it. They're like one of the best guys out there. You get so.
Thank you.
Any other question, please ask. Like, I mean, this market, this trending uptrend and downtrend source I give to you right now, like, is the very basic and is powerful. I can tell you the truth. Basic and powerful. Very basic and powerful. So you don't need so many complications. Like I tell you the truth, people use this stuff I just said now. People use to make a whole lot. People use to make a whole lot. So there's no you don't want to complicate yourself. Yeah, you don't want to complicate yourself. So you have any question, please ask. So we can continue. All right, someone is raising. All right.
Please, sir,
Yes, I can hear you.
what was the name of the tool used in join the line?
Okay, let me go back and show you. So what I did basically is, like, if you look at your side left side of your screen, you see these two area. Yeah, so you have the trend line. You see the trend line. So most of these one that is starred yellow, like that is starred, these are like my favorites. So anyone you click, you see them appear at the bottom. Look at it here. You see that? So these are the tools I use for my analysis. So you can find yours. Whatever just makes your chart looks clean, just go for it. So you can just play around with them and know how well to use them. I don't use a lot of these things here. You understand? I don't use a lot of these things. So there are tools here, countless number. See that now? There are a lot of tools you can use. See that? So I just select mine and leave the rest. See that now? So that's it. Is that okay?
Yes, sir.
Any other question? If there's no question, then I think we'll just talk about supply and demand briefly, and then we'll continue tomorrow with supply and demand. Powerful, very powerful. Supply and demand, powerful. Now, let's talk about supply and demand. Supply and demand. I just showed you guys how to identify trend. Yeah. So let's talk about supply and demand. What is supply and what is demand? This is basic economics. Yeah. Supply and demand. Supply, people supplying. Demand, people making a demand for a particular product, goods, or services. Yeah. So do you know that everything we trade here, everything we see here are sponsored by emotions? All this candle that are printing here tells you it's like it tells a story, yeah, a story of people's emotions. These are like tons and tons of emotions being printed on a candlestick. So it tells you why people are, when you see there's a way a candle will present, you know that there's pressure. People want to buy from here, people want to sell from here, and all of those stuff. So that's the concept of supply and demand. Supply and demand basically means that there's a level where people want to sell off. There are levels where people want to buy. You understand that now? It's the same thing when you go to the market. For instance, let me give you an example. You go to the market to get, let's say, a gadget, an iPhone, for instance. So when you go, let's assume the iPhone is around $1,000. I'm just giving an example. $1,000. Then they find out that those guys are not selling off. Probably went to the store, they are not selling off because of the price. So they beat down the price to $800. You find out that they have a lot of guys, rushing in trying to get it at that price because they believe that it's a discount. Have you heard of discount sales before? When you hear things like discount sales, distress sale, people want to buy because they believe it's cheap. You understand that now? So they want to get in, they want to acquire that product, they want to get that service because they believe it's cheap. That's the concept of supply and demand. There's a level you can beat your price down, you attract buyers. You understand that now? You attract buyers. So, and there's a way the demand of a product will be. For instance, if there's so much demand on a particular product, you find out that the price of that product begins to go up. Are you getting it now? So the price of the product begins to go up because there is so much demand on that product. So it means that the number of people wanting the product outweighs the supply of the product in the market. So what they do to filter the people who are really, really interested in it is to increase the price. So for instance, if you have like, let me still use an Apple product, for example. We have like an two iPhone 15 here, and we have like 10 people that wants to buy two iPhone 15. We just have only two products here. So, and we have like a general agreed price. Let's say at $1,000, 10 people wants to buy it at $1,000. You understand that now? But we don't have enough of it to go around. So how do we now filter the people who are really, really interested in this stuff? Have you heard of bidding before? Where you go to, I don't know, you go to places where they sell expensive things. I've seen those movies where they want to sell out an expensive artwork or an expensive vow like that. So people are bidding in the house. You find out that, okay, going, $10,000, $20,000, the highest bidder takes it. So that's what supply and demand is basically. So for those two products that we have 10 people who wants to get that product, the way to sieve the people who are really interested in the product is to shoot the price. So when they say the price is 1.5, people who don't have 1.5. Sorry, they just turned on the gen. Let me close my windows. I'm coming, please. So sorry guys, they turned on the gen, so the noise. So cool. We have 2 products and we have 10 people who wants to buy the products. So we have shortage of supply, but we have much demand. So the best way to do it, to see the people who are really interested in the product, is to increase the price. So people who don't, let's assume they push the price from $1,000 to 1,500. So people who don't have 1,500, they're going to back off. Yeah. So leave the fight to the guys who have 1,500 to continue. So there's a way they shoot the price. The ones who truly have the money wins the game. So that's how it is in the forex market. So for instance, we don't have the resources, the funds to really push this price. Trust me, none of our monies for retail traders is enough to print one candle. I'm telling you, your money cannot print any candle here. Your $10, $20, $30, $40, $50 million cannot. These things are billions of dollars. Are you getting it now? So the big banks, they call them the big banks. The big banks are the ones in control of this. Yeah, the big boys, the smart money. They call them the smart money. So they pump in billions of dollars just to push this market, just to print these candles. So what you want to be doing is getting in with them and know the direction, getting with these guys and also make your money from them. Yeah. Because many of these guys are not out there to make gain necessarily. You know, there are reasons why many people trade. Why some trade for money or for gain, while others trade for control against inflation and all of those stuff. So most of these big boys, they don't care about returns necessarily. They just want to, put their money in a place where inflation doesn't catch up with it. So that's the reason why many of these guys trade. So how do we spot supply and demand? How do we know where these guys are really interested to get in this market? Where are the supplies? Where are the demand in the markets? It's very, very simple. Yeah, very, very simple. And trust me, this is where it becomes very, very interesting. And I want you guys to pay serious attention to it. In a few minutes, we'll be done. I want you guys to pay serious attention, please, because this is where it gets very, very interesting. So when we talk about demand, yeah, demand means you want to buy something. If you are placing on a demand on something, it means that you want to buy. Yeah, so it's the same thing as buying. So where are the buyers sitting? Where are they sitting in the markets? Where are the sellers? So supply means selling. So it means that if demand means buy, so demand should be down, right? Am I correct? I told you guys if the market is going up, you should be what? Buying. So if the market is buying and demand means buying, buyers or buying, it means that demand should be down. Then for supply, it's up because suppliers are the ones selling. Am I correct? So if you meet your supplier, it means that you want to get something from that supplier. So suppliers are sellers, if you like. So supply is up, demand is down. So now how do you know a valid supply demand in the market? How do you know where these buyers are sitting? How do you know where these sellers are sitting? So that you can take advantage of this and make money. Because you don't want to be selling when the guys, where the buyers are, and buying where the sellers are. Are you getting it now? So you want to be buying with them and selling with them as well. So cool. Where are they sitting? Now, this is a simple way to know supply and demand. Please take note of this. I told you, when price is going up like this. Now, first of all, let me reiterate again. Price does not move in a straight line. Price does not, note this, price don't move in a straight line. So what it means is that there are struggles. Wave is like wave. It moves in a wave form. And now this thing is simple. Buyers try to buy, sellers want to sell. Buyers try to buy, sellers want to sell. It's like a fight. So they are bidding for a particular price. So they want to buy, this one wants to sell. They want to buy, this one wants to sell. So how do you know where the true buyers are sitting? Yeah, like I want to know where are these guys are so that I can join them to buy. Then where are the sellers sitting so I can join them to sell? So these are the two things you are doing. Trust me, the only thing you'll be doing in trading is clicking that button, your buy button and your sell button. And you're wondering, why is it that I'm only buying and selling? Then why am I not making so much money? It's not as easy as you think, because you just buy and sell button doesn't mean that anybody can come and click buy and sell button and make money. So you want to know, and this is the reason why you are here. Yeah. So this is where it becomes very, very interesting. Please pay attention to this. Now, I'm on the 15-minute chart, and for most of us who have decided that, let me not say decided because you've not started trading yet. For many of us who will be day traders like me, like you trade within the day, and you take your major profits within the day. You are not holding trades like for weeks, days, and all of those stuff. So you trade every single day. You come to the chart, look at opportunities. When you find one, you enter. So this is what you want to be doing. From your 4-hour should be like your higher time frame. Your 4-hour should be like your higher time frame. Note this. You don't start your analysis from 1 minute, please. You will learn the hard way. Don't start from 1 minute. At least 4 hours. For the people who are day traders, at least 4 hours. So what do you want to do? What do you want to see? Let me draw a textbook diagram for you. So you want to see buyers. Let's talk about demand first. You want to see buyers buying up, yeah? You want to see buyers buying up. So at the point where sellers try to sell, and the buyers took it from them again, that's where the buyers are sitting. So what you do is that when next price come back there, you get in on your buy and continue buying. Please, did you catch this one? If you didn't catch it, let me know. So for the demand, you want to see, like I told you, demand is buying, yeah? So you want to see where buyers are buying, then sellers try to sell it. But I told you, if the market is coming down, the high is supposed to be protected, yeah? So at the point where the high fails, it becomes your demand. So when next price comes into it, boom, you are buying. Did you get that? Please don't assume you got this. So I'm begging you. Like, this is where it becomes very interesting. How do you spot a demand? Let me start again. Buyers trying to buy, sellers trying to counter them, yeah, to sell. At the point where sellers failed, it becomes your demand. So you take the buy when next price comes into that zone and continue buying. Did you get that? Please let me hear from you guys.
Yeah.
All
Yeah.
right, so cool. Now let's spot this thing I just drew here on the chart. Let me go down to okay. Delete this. All right, cool. This 4-hour time frame. I use this for like that's like the lowest time frame you should start your analysis from as a day trader. So when you come on the chart in the morning, you check your 4-hour. Where is your demand? Where is your supply sitting on your 4-hour charts? So if you look at this scenario here, price try to buy at this level. They try to buy it. Buyers try to buy it at this level. What happened? Sellers took over, broke buyers at this level, continue selling. So when next price gets back to this level here on the 4-hour, I'm going to be selling. Now, mind you, let me show you something again. There's something I didn't mention to you guys when now this is what I want to show you guys. Buyers buying. Sorry, let me do that again. Buyers buying here. Sellers try to counter. Then buyers broke them. Now, your demand is the height from which the sell started from and the lowest point the sell got to before the buyers took over. That's your entire demand zone. Are you getting it now? Same thing for your supply. Let me inverse this so that you get it. See that? Same thing for your supply. At the point sellers try to sell, buyers try to counter, then sellers broke. The lowest point where buyers try to buy from and the highest point they got to before they took them out is your supply zone. So when next price gets to that level, we are in for a sell. We got this to this point. Please talk to me. Talk to me, guys. So if you got it, no
Yes.
problem. If you got this, let's go into the real chart. Let's find this on the chart. So now, don't mind whatever is happening here. Let's just take the most recent price action. So now we have buyers try to buy this here. I told you, you start your analysis as a day trader from 4-hour time frame. Look at it, I'm on a 4-hour time frame here, 4 hours. So I want to find my 4-hour supply, my 4-hour demand, so that I can start my analysis. So now, buyers try to buy at this point. What happened? They failed. And sellers took over to this point. So where was the lowest point? Where was the lowest point where buyers attempted to buy? This was it, yeah? And where was the highest point where they tried to, where they bought to? This was it. So this entire candle is your supply zone. Are you getting it now? The entire candle is your supply zone. Now, this is too big for you to now place trade. This 4-hour time frame. You should understand that. So I cannot come and start placing trade from here and say, okay, like who does that? 141 pip. That's madness. But then I'm just showing you the bigger picture. This is like a 4-hour time frame. So when you find your 4-hour supply, what it helps you to do is, you know, okay, this is where these guys are sitting. This is where the sellers are sitting. So when price come into areas like this, I'll be looking for sell opportunities. Are you getting it now? Now, same thing for the demand. Let's look for our demand. Where buyers attempted to buy, no, where sellers attempted to sell, then buyers took over. Can we spot that? Yeah. Look at it here. Are you seeing it? That's the black candle you saw here. So if the market is selling, it's printing black. I was the one that chose the black candle. So if you open your MetaTrader, I think you see green and red. Yeah. So the green means buy candle. The red means selling candle. So I just decided to customize my own. So cool. The black candle means sellers. There's sell pressure. Sellers want to sell. Yeah, so cool. What happens here is sellers sold. Yeah, buyers attempted here. Sellers sold. So this too is your supply. Are you seeing that now? Now, buyers attempted here. Sellers wanted to sell, but what happened? They failed. Buyers continued. So at this point, I pick this candle, the entire candle, as my demand zone. Please, do you get this? I want you guys to get this in the name of God. Please, did you get this thing I just said now? Let's talk. Guys, let's talk.
Please come
Did you
again.
get this thing I just said? Like, this is like the game changer. Yeah.
Yes, we do. I do.
This is like the game changer, please. If you don't understand supply and demand, I don't think you'll be able to trade.
Sorry, if
I
you
don't
don't.
think you'll be able to trade. Trust me, I don't think so. So this, like, let's start. Let's do this again. Let's do this again. Let me delete all of this and start all over again. All right. Okay. Delete. Delete. So cool. How do I spot my demand and my supply? Buyers attempt to buy and sellers took over. Like I told you guys, remember I told you guys in market structure, if the price is buying, what is happening to the lows? They should be protected. They shouldn't be taken out. Am I correct? So we expect that even if sellers are selling, they should come down to this lowest point and continue buying. Yeah, that's the idea, so that we can get in on the trend. You get that now? Remember, you see how all of these things are making sense now? So cool. Now, at the point where buyers try to buy, then sellers violated that lowest point and keep selling. It has turned our demand to supply. So it means that from the lowest point that was broken to the highest point they got to before sellers took over is your supply zone. So it is safe to say from this low here to this high is where the sellers are sitting for my 4 hour. Are you seeing it now? So now from my 4 hour time frame, I now know my supply. This is where, if I'm going to be selling, where price is going to get to for me to continue to sell. Are you getting it now? So now you come to look for your buy, your demand zone. So this is my supply. Okay, I think I have to supply zone. All right, what happened? Supply. So we have our supply zone here, correct? Then how do we spot our demand zone? Simple. At the point where sellers want to sell and then buyers took over the sell, it became that whole place, that whole area becomes my demand zone. So where is that area here? You find it. So sellers sold to this point. Buyers, sorry, what am I doing? So sellers sold. The sellers sold here. Buyers attempted to buy from here. Sellers took over again. Yeah. So buyers attempted to buy from here. Sellers took over, but they didn't break this point. What happened? Buyers took over again. You see that? Buyers are entering. So at the point where sellers attempted to sell and the buyers took over, becomes your demand zone, because the highs of the sellers was violated. Let me Oh, let me show you guys. Let me zoom in so that you guys can see very well. So because what this is supposed to do is, as soon as price sold, buyers attempted, because this was the last supply zone. Are you seeing it? Because buyers attempted to buy from here, sellers took over again. So it becomes a supply. What happened here? Buyers attempted here, or sellers took over from here, but they couldn't hold it to break this point. Are you seeing that now? So since they couldn't hold it to break this point, what happened? Buyers took over. What happened? They tried to sell it again. Buyers took over at this point. So this is my supply zone. Sorry, my demand zone. Sorry, demand. Are you seeing that now? So cool. This point too. You see this point where sellers attempted to sell, but buyers took over. Is still a demand zone. Now, I hope you guys are getting this stuff. I hope you guys are getting this stuff. Now, let me show you the moment you are able to get your supply and your demand zone intact. Let me delete this and mark it with, sorry. So this is my demand. This is my supply. Are you seeing that now? This is my supply. Are you seeing that? So what did you see? You see how that when price got to this supply, what happened? You saw that it sold here. And what happened to when price got to this demand here? You see that it's buying. Are you guys catching this? It's like the magic. There is like the magic. Are you getting it now? Very simple. So cool. But the problem is that we are not going to be trading from this time frame. We're not going to be entering from 4-hour levels, because if you look at it, let's say this is like 50 pips. I don't risk 50 pips because within the day, the market, like on a very good day, like let me say the day that there's enough volume in the market, like days like this where you see big candles like this, if you calculate it, you check it, this is not up to this. Okay, this is like 257 pips. I don't think this happened in one day. Let me check. No, it didn't happen in one day. It happened in 2 days. See that? It happened in 2 days. So cool. So in a day, market moves at least let's say 50, 30 pips at least, like within a range. The market can move 50 pips, 30 pips within a range, 20 pips. But in a day where there's volume, like there's news events, you can see the market move like 100 pips, 150 pips, 200 pips. So imagine you risking 50 pips in the day where the market is moving just 50 pips or 20 pips. You find out that you are not making so much. You understand that? So you don't want to be doing this. What you want to be doing is risking little and making more. Yeah. So sometimes I risk 5 pips as low as this. 5 pips. The red shaded part is my risk. Yeah. 5 pips, sometimes 4 pips, sometimes 2 pips. I don't advise you to use 2 pips. So for you guys that are starting out, you should use at least 10 pips, max of 20 pips. Are you getting it now? So you want price to get to a point where if you place your 20 pips risk, it will accommodate it and still give you money. Are you getting it now? So cool. We'll talk about this risk management and all of those things, in subsequent videos. But then, subsequent training. Let me continue with supply and demand. So cool. You see how when price came to our supply is sold, and when price came to our demand is buying. Are you getting it now? But so the problem here is We are only using this 4 hour to mark out, okay, to know where we are at in supply and where we are at in demand. Yeah. So where's our demand and where's our supply? We've marked our demand out, we've marked our supply out. So how do we now refine it? Because you want to refine it so that you can get your 10 pips. Yeah, you can get that your 10 pip risk. It's the price will give you that 10 pip range where you can risk and then make your money. Yeah, you don't want to be risking 50 pips, 100 pips. You will not make money here. So you want a very small risk and high reward, high return on your trading. Yeah, so cool. We've marked out our high time frame, 4 hour supply and demand zone. So we go down to 1 hour. Maybe you can check your 1 hour to find out, is there any supply or demand? Yeah, so there are so many supply and demand. That's the reason why you have to use your higher time frame. So if you look at this chart now, you find out that there are so many supply. So you find out price was buying here, sellers tried to sell. What happened? Price went up. When price came back, they bought. Yeah, you see that now? It is everywhere. Supply and demand everywhere. But the reason why you have to use your 4 hour time frame is so that you can spot the high probability, where you know when price come into, there's the chances of price moving away from that place is high. Yeah, you don't want to be trapped in a range. So cool. These are 4 hour supply above, demand below. So when price came to our demand zone here, how do we get in on a buy? Because when price comes to your demand, you want to be buying. Yeah, you want to be buying when price comes into your demand. So what you will do is you want to see price create a lower time frame demand as well, so that your lower time frame demand gives you a tighter risk and a good return, a good reward. So, and that lower time frame is 15 minutes. For day traders, you use 15 minutes. So if I come down to my 15 minutes here, what do I want to see? You see, I want to spot the place where sellers try to sell and buyers took over. The same principle. The same principle. So how do we spot that here? It's simple. Look at it here. Price sold here. Buyers tried to buy. Sellers took over. Buyers tried to buy here. Sellers took over. Buyers tried to buy here again. Sellers took over, but they didn't break. Then at this point, buyers took over again. So you see how buyers violated sellers here. Yeah, this point. Please, are you guys seeing? Let me even delete all of this stuff so that you see it very well. Are you guys seeing it? This is simple and powerful. Please pay attention to this thing I'm saying. Simple but powerful. All right, so remember we are in our 4 hour demand zone here. So cool. What's happening when you want to delete? All right, cool. I told you guys, you want to see sellers being violated first before you get in. So what happened here? Sellers, I told you, as it's falling, sellers are in the market. So this white candle is the buyers. Buyers try to buy. What happened? Sellers took over. Buyers tried to buy again. What happened? Sellers took over, printed the black candle. Buyers attempted to buy. Sellers took over, but buyers took them. Here, broke their high. Are you seeing that now? As soon as buyers broke their high here, this becomes your demand zone, your new lower time frame demand. Here. Are you seeing it? Your new lower time frame demand zone here. So what happened here was that when buyers took over here, when price came back to that demand zone, you get in on a buy opportunity here. And how do you get in on a buy opportunity? So when sellers came down here, when sellers came down there to the place where buyers violated the sellers, the first point, you want to see a bullish candle, you want to see a buy candle before you enter. You want to see a buy candle print first at your demand zone. Because when price is at your demand zone, you want to see that buyers are in. You cannot be buying when price is printing this black candle when we are in our demand, because in your demand you are expected to buy. So you cannot be seeing sellers then you are trying to buy. You want to see buyers coming. So in your demand, when you see price printing the white candle, which means buyers are in the market, it mustn't be white. I told you I customized my own to white. So buyers are in the market because at your demand level, you are supposed to buy. So when the buyers come in, you want to see white candle being printed in your demand zone. As soon as the white candle is printed, what do you do? Because this is your 15 minutes. As soon as the 15 minutes closes, bullish closes with white candle, you get in on your buy here. Yeah, you get in on your buy here. Your stop loss should be below your demand level. You see that 15 pips here. See it? 15 pips. So you, as soon as the candle closes, after 15 minutes candle closes, you get in on your buy position, you put your stop loss below your demand zone, and then you target the next higher time frame supply zone. You see that? And that's where price is going to. Are you seeing that now? Please, guys, are you guys getting this thing I'm saying? If you are lost, please let me know. Let me know if you are lost. Please let me know, guys.
I'm lost, sir.
You are lost.
Yes, sir.
All right, you get it. I think let me retreat one more time. Simple. All right. Let's do the maths. Let's go back to 4 hours. I told you guys, for day traders, people who are trading within the day, your time frame, your lowest time frame should be 4 hour zone, 4 hour time frame, because 4 hour time frame helps you to pick out quality demand zone and quality supply zone. Yeah. So, and what did I say supply is? Supply is the point where buyers try to buy and sellers violate them. So the entire zone becomes your supply. So at this point, buyers were in the market buying and sellers took over. Now I told you, as sellers took over, doesn't mean that the price is selling, but at the point where they took the lowest point of the buy move, yeah, they took the lowest point of the buy move, the entire zone from the lowest point to the highest point the buyers got to becomes your supply. Yeah, becomes your sell zone, because it was at the point at the zone where sellers got in, the pressure was there and they kept selling. So you're expecting price to come back to that level so that you can spot an opportunity to continue selling. That's the idea. Are you getting it now? Please, you will not get this in a day. For some of you, you have to go back and watch this video again and again just so that you get it. Yeah. So cool. From the low to the high, before the break or after the break, that is your supply. The same thing applies to your demand. You want to see where, because demand is buyers, yeah. Demand means buying. Buyers are in the market, yeah. So, and what do you say buyers do? They push the market up. So you want to see where sellers attempted to sell to push the market down, then buyers took over it. So this was the place where sellers tried to sell, because if the selling pressure was much, what would have happened here was that this place at this point it would have just continued selling towards the downside like this. Are you seeing it now? So, but it didn't happen. What happened was that they tried to sell it, then buyers took over and broke them. We want to see the high at which from where sellers started to sell this market taking. Let me show you. This was the point where they started to sell the market. Yeah, let me zoom in so that you see very well. Are you seeing it now? This was the point where they tried to sell the market down. So if they had succeeded, what would have happened was that they would have continue selling like this. Are you seeing it now? So at this point, when they try to sell, what happened? Buyers took over from here and broke them. Broke the high here. Are you seeing it now? So at the point where they broke, that's the highest point where, from the point where sellers tried to sell to the point they got to before the buyers took over, becomes your demand zone. So from this high to this low is your demand. So what do we say demand zone is? Is the point where we are supposed to buy from. Supply zone is the point where we are supposed to sell from. So what it means is that at this demand zone, whenever price gets back to this place, I'm going to be buying. That's what it means. So price went, we had price do its thing here, went, did all of this, then came back to this point. Yeah. Now, if you wanted to buy from this, maybe you didn't want to do so much work, just wanted to get in here. When price got to this level, then you just want to get in here. See, this is like 30 pips. It's too much. Yeah, it's too much of a risk. And by now, you will not even get like 1 ratio. This is like where price is right now. This is like 1:1. So let me assume you are risking $10 here. In how many hours? Let's say 1, 2, 3, 4, 5, 6, 7, 8. This is like 24 hours. 24 hours plus 8. In 32 hours, you've not even made up to $20 from here. If you are risking this, if you are risking $10 in 32 in these 30 pips, you are yet to catch twice of whatever it is you are risking here. So we want it in such a way that we are risking little, yeah, as 10, 15, 20 pips. If you are risking 10 pips, by now, you should be 1:5 up. What it means is that this red part is your risk. So you can risk $10 inside 10 pips. You can risk $20. You can risk $1 million. You can risk any amount inside these 10 pips. So this red part is your risk, because you are predicting that from this demand zone, the market is supposed to go up. So you want to be risking little and be making high profits. Yeah. So if you are risking 10 pips from here, let's say you are risking $10 inside these 10 pips. Right now, you should be $52 up in profits. Are you getting that now? If you are risking $5, like 5 pips like me, which I don't advise you to do for now because you are still learning, like me, you'll be, and inside these 5 pips, I'm risking $10. Right now, I should be making $120. So you see, the lower your risk, the higher your return. There are people who can risk 2 pips from here, yeah, or even 3 pips. You are risking 2.5 pips. Right now, you should be, and you're risking $10 inside your 2 pips. Right now, my dear, you should be $270 up in profits. Are you getting it now? So, but for you guys who are starting out, 10 pips is not bad, 20 pips is not bad. If you are risking 10 pips, your target should be 30 pips, 40 pips, 1:4. So if you are risking $10, $20 inside your 10 pips, and you're catching 30 pips, you should be getting like $30. If you're catching 40 pips, you are getting $40. Don't worry, all of these things you get to understand as you begin to trade. So these are the things. What I want you guys to do is go to your MT5, your MT4, whichever platform you use. Just start placing trade, get a demo account, register with a broker, just place trade and see how, just watch how price is moving. Just enter buy and sell, just enter anything and watch how price is moving. Watch how the return, like what you are getting in return as you open those trades. Just play around with it for now so that you get to understand what I'm saying. Yeah, just play around with those tools that you've downloaded. So I know I'm going hard on you guys for now. I think I'll have to stop here so that for some of us, let's get to internalize what a supply and a demand is. So basically, it is at the point, so for supply, at the point where buyers attempt to buy and failed. So you pick your supply, and for demand at the point where sellers attempt to sell and fail. That's your demand zone. So are we clear on this? If you are still not clear, let me know. Or meanwhile, this video will be sent to the group. Will be sent to the group so that you can go over it again and again. So are we clear? Are we clear? Are we clear on this? Please ask questions or let me know, guys. If you're not clear, let me know. Supply and demand principle. I think I'll look for a video that explains this very well and send to you guys so that you guys get to understand. Nothing complex, nothing hard. So I assume you guys understood what I said. All right, I'm happy. So any question, please? Any question, I mean, from the things we've been talking about up until now, do you guys have any question? If you have any question, please ask. If you have any question, please ask. If you don't have any question, I'll ask my question. Should I ask my question? There's no question. All right. I assume you guys got it. All right. What we'll do is I want you guys to draw for me supply and demand. You now know the principle of supply and demand zones. You know the principle. So it's simple. Where buyers attempt to buy and fail, and where sellers attempt to sell and fail. So it's your supply and your demand. So look for it on the charts. Use any time frame you want. It mustn't be 4 hours. Use any time frame. There are a lot of supply and demand here. A lot of supply and demand here. So use any time frame you want, and then let's get that done before tomorrow. Just give me mark 3 examples of supply and demand and send it to me. Send it to my DM. Send it to my DM so that I will know when I see it, and if it's correct, I will applaud you, and it helps you learn, helps you grow faster. So please try and do my assignment. Please, I beg you guys. Do my assignments. Is that okay? Are we clear on this so that I will know, please? All right. I assume everyone understood things we just discussed. So I will still drop the assignment in the group so that everyone gets to know. Then I will drop this video in the group too so that people who are lost can still go back to it. Is that okay? All right, guys. I think I'll draw the curtain to a close at this point. Videos will be sent in the group. Please submit my assignments so that I'll know you guys are following. Is that okay? Is that okay?
Yes, sir.
All right. Take care, guys. We'll see you tomorrow. Continue from where we stopped. At this point, you guys are traders, so know it. If you can mark out your supply and demand, you'll be making money. Draw your trend lines, know where price is heading to. You can mark out supply and demand. Trust me, you're good to go. Is that okay?
Yes, sir.
All right, guys. Take care of yourself. Have a wonderful night rest. For the guys outside the country, I don't know if it's day or night, or have a wonderful night rest. Have a good day, and all of those stuff. We'll see you tomorrow in class. Take care, guys. Okay.